Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, a standout stock on the local index has been the retailer JBH. It recently hit a record high and has risen more than 60% over the past 12 months. In the wake of its half-year update, when it reported an 8% increase in net profit after tax, Sean Hickman from Market Matters discusses the stock's technicals and fundamentals.
It's right up there, isn't it? It's a bit like CBA when it comes to the banks. We think it's arguably the best, but at what price? I noticed the two ratings you mentioned before. I think it was Goldman Sachs saying sell $73.90 and Citi saying buy $110. You could drive
a bit of disparity there.
You could drive a truck through that one, couldn't you? We think it's a great stock. We actually took profit on this one too early on the charge up. Again, what have we got here? A stock that's way more than doubled in the last 2 years. The re-rating on the valuations has been extreme. I think we're going to see further weakness in the stock. We'd be very keen and interested in the stock, but we want it under $90. It's got to show valuation. To get to the point, it doesn't matter how good a company is. As we saw yesterday, if they're priced for perfection, all the risks are on the downside. JBH, quality stock, under $90, might get a bit interesting. But the market's long. It's what we call a crowded trade, a bit like Car Group. It's hard to find the new buyers coming in too.
In the midst of rising global uncertainty, gold remains in a bull market. Sean Hickman looks at central bank buying and its price movements.
So last time Trump was in power, China bought gold for 10 consecutive months. They've started buying gold again. It's actually going up when the Fed is looking likely to pause for quite a significant amount of time on rate cuts, which would normally be a bit of a headwind for gold. The US dollar's been strong, normally a headwind for gold. Doesn't matter. Trump is causing uncertainty. The Chinese are buying. It's pushing it up. You've got a commodity that is making new all-time highs. You've got a market that, in our opinion, has got further to go. So we would not be selling here. But I think most definitely the easy money has gone, Andrew. And if anything, I think it's slowly getting to the point where you should be looking for levels where you might take a bit off the table.
Now, while acknowledging that gold has been the leader as investors seek the safe haven asset, Richard Weissman from Weissman Consulting says silver has been lagging, which presents significant upside.
As bull markets in precious metals mature, later stage bull markets in metals, silver tends to play catch up, and then in the very late stages tends to be the leader, if history is any guide. Every bull market's different, obviously, but our next level, this is a clear uptrend. You can see the uptrend line there. The next serious level of resistance that I'm looking at is $35 a barrel. It's not that far away. And way, way above there is the $50 record highs. If we get beyond that, you could see some real frothiness and that kind of buy at any price mentality. I feel that that is a definite possibility and something for us to watch for in 2025.
Well, that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.